Okay, recording this video after close of trade Thursday, 15 July 2010, and we had a reversal day on the markets today. I've got a 4,500 tip bar chart of the Emini here. Shows that we sold off hard in the morning for the first hour, ended up with exhaustion selling signals and bullish divergence down at the low at 76, and then we rallied in a fairly kind of disorganized manner for the rest of the day. The notable pattern in the afternoon was this kind of sell-off again, trying to test the 1080 level with exhaustion selling down here. It was a cyclical turning point, and then we rallied kind of pretty hard into the close. Some of the notable kind of news stories that came out today, we had kind of the BP announcement. We also had kind of Goldman Sachs. Personally not a fan of the news that came out on Goldman Sachs, but just looking at my charts, I don't day trade stocks, or actually I don't swing trade stocks anymore at all, but it's just interesting. This is my daily and weekly charts, which is kind of two of the time frames I'd recommend for kind of swing trading stocks. You can see here, this is Goldman Sachs. This is before the announcement back in, I think it was April 16th or so, when we had the announcement of the SEC investigation, and Goldman had reached an end of trend warning signal at $186. Here is kind of a perfect top, and we fell off. I mean, it fell off a cliff on that day, and then we've kind of just been playing out over the last couple of months back down to this cyclical turning point on the weekly time frame. And when you drop down to the daily time frame, we had a rally today quite on this kind of supposedly good news, and it was a second cyclical turn after an end of trend warning signal. So this kind of the end of trend warning signal says that the price damage is an extreme at this point. We need kind of a cyclical turn after that in order for the market to kind of fully exhaust itself, and then we can start to rally at that point. And you can see here, these are the exhaustion selling volumes that we had. It was kind of climactic selling at this point, and then over the last couple of months around the 140 level, we've just been making these bullish divergence patterns here. Just some pushes down. Here's a little amateur bar back just below 135, right at this low on this cyclical turn, and then this, when this pattern is kind of coinciding with a cyclical turn on the higher time frame, we get kind of reversal of trends happening. So and this kind of push through this cyclical resistance level here could see the continuation of an uptrend, or the start of an uptrend for Goldman Sachs. And that's really one of the things I want to talk about just later in this video, about the importance for me of these kind of lower and higher time frames, and how trend moves in lower time frames are equivalent to cycle moves in higher time frames. And we've got a very good example on the intraday charts today that I want to show you, and there's a parallel in what's happening in the higher time frame chart, so I want to just kind of go through that. But just kind of looking at our oscillators, Trin oscillator, we've not turned down. We're playing around this 1100 level. I personally think we're going to burst through it on some exhaustion buying, and that might be kind of the signal for the top of this move. But we're waiting for the Trin oscillator to turn down, and the put call ratio is also kind of overbought, 184, 241 on these, and we're just waiting for a weak bar to kind of come up, and these oscillators will start to turn down, and we'll take profits on these long trades and signal kind of a little bit of a downswing kind of going forward. In the longer term charts, this is what we're looking at the moment. I'm just going back. Remember, this is the monthly chart. Just looking at this on the S&P 500 index chart. Similar kind of patterns on the S&P and the E-mini charts, but just you can see the full history here, whereas you couldn't on an E-mini chart. So this is the 1200 level. This was a cyclical turning point on the monthly chart, and so the momentum over the next few months is going to be to the downside. So any rallies are going to be hard work, because the highest time frame is in a downswing. Having said that, though, when we go to the weekly chart, we formed a pullback in an uptrend here, and this is what I'm seeing. This is kind of, for me, the final kind of topping out process, where we see an end of trend warning signal kind of coming on the weekly time frame. Not sure what that's going to be, because we broke through this pullback level. It'll just be a cyclical turn here, but we're a ways away from that. And then when we back it down to the daily chart, we've just had the cyclical turn happening. So we've got kind of conflicting cycles. In the highest time frame on the monthly chart, we've got a downswing. In the medium time frame here on the weekly chart, we've got an upswing, and then on the daily chart, we've got a downswing here. So what normally happens when you have kind of conflicting signals like this, conflicting trends in different time frames, is it's just a question of time to work these out. The highest time frame trend will generally win out, but then the lower time frame trends just have to work themselves out. This weekly uptrend has to work itself out until everything gets aligned, and then we'll have weekly, monthly, and daily kind of time frames all aligned on a downtrend, and that will be the start of the next kind of big down kick. So But in the meantime, what that means is I think any kind of rallies are going to be muted. We're not going to be shooting past 1200, I don't think. But I'm expecting a downtrend in the daily chart. But again, we need the weekly chart to play out before everything starts to line up. And so just talking about these kind of cycles and trends in different markets, here's the lowest and the highest time frame tick bar charts that I use in my intraday day trading of the E-mini. So this is the 4,500 tick bar chart. The lowest time frame is the 500 tick bar chart. Now I use a ratio of a multiple of 3 between my time frames. So from the lowest time frame times 3 gets you up to 1,500 for the intermediate time frame, times 3 again gets you up to 4,500 for the highest time frame chart. You can see here at the end of the day we had beautiful kind of cyclical turns kind of play out. All I'm looking at here is a better sine wave on these two indicators. So this cyclical turn on the 4500 tick bar chart and the cyclical high here at 1096 on the 4500 tick bar chart. When you drop it down to the lowest time frame, the 500 tick bar chart, you can see here this point here at 1080 was an end of trend warning signals. This is a trend move on the 500, the lowest tick bar time frame. When that coincides with a cyclical turn on the highest time frame, either an end of trend or a second cyclical turn after an end of trend, those tend to be high probability trade setups. And then you can see the market rallied up, and there's our second end of trend warning signal at the very top here. We push through by a half point or something, and that coincides with a cyclical turn again on the highest time frame, and the market starts to sell off. So this is a trend move in a lower time frame is equivalent to a cycle move in a higher time frame. And the beauty of the better sine wave indicator with these end of trend warning signals, what that's showing you with this pullback and end of trend is that's price exhaustion. This is price exhaustion, and when that coincides with volume exhaustion and professional activity, that's when you get turning points. So the beauty of this is these end of trend warning signals is showing price exhaustion, and when that coincides with cyclical price trends, price signals in higher time frames, those kind of high probability charts. So remember this lowest time frame, highest time frame relationship. Now let me just show you what's happening in the daily chart and the lower time frames chart. So this is daily chart, happens to be a 1440 minute chart. I just use that because I get the bid and ask data in TradeStation, but we're coming up to a cyclical turn here in this time frame, the daily time frame. Now if you knock that down to an intermediate and then to a lowest time frame, the lowest time frame chart equivalent to the daily chart is a 45-minute chart. Again, times 3 times 3, 45 minutes times 9 is 405 minutes. There are 405 minutes in an E-mini day session. So here we've got today's activity was a pullback. We hit a pullback level in a pullback in an uptrend on the 45-minute chart, and over the next day we'll have a cyclical turn here, and we'll then have an end of trend warning signal here. So when that end of trend warning signal then lines up with our cyclical turn on the daily time frame, again we get a high probability setup signal here. But you can see what was happening. We've had this kind of burst of activity into this new uptrend here was actually again a cyclical turn close to an end of trend warning signal. This cycle turn here we had a pullback and didn't quite get an accurate kind of end of trend warning signal here, but it was close enough for me at least to call that low at just over 1,000, and then we kind of rallied strongly since. End of the day here we had a high volume profit-taking bar, signaling that there was some profit-taking going on. We're inches away from the 1100 level. I think we're going to kind of push through that over the next day, and we're going to hit a lot of stops. We're going to hit a lot of psychological kind of triggers that 1100 is broken. We might have a resumption of an uptrend, or confirmation of a very strong uptrend, and I think that's going to be the signal that sellers will come in. If we get that, that'll be an end of trend warning signal coinciding with a cyclical turn on the higher time frame. And sometimes I get accused of, well, not accused, I mean I get some extremely nice comments through my emails, but just lately I've noticed that people are saying I've got a lot of charts that I pull up from time to time, and yeah, that's true. I do use quite a lot of charts. You don't need all the charts I use. Really, you can just go with kind of just very ordinary 500, 1500 and 4500 tip bar charts for day trading. But the 45-minute chart is, for me, kind of equivalent to the 40,500 tick bar chart, the highest time frame tick bar chart that I look at. And you can see here we've got exactly the same pattern playing out. We broke into an uptrend, we've had a pullback in an uptrend signal today. We're coming up to a cyclical turn on this point, and there's the kind of professionals at the end of the day kind of taking profits on these highs.